Since everyone's so bullish about India after the recent fall, let's talk about exactly that. Less than 300 points, and we should make it to that 24K mark as well. Kunal Naresh on the show with us as always. Kunal, hi morning. What's it looking like? Another up day like yesterday?
Yeah, similar to yesterday. And I think potentially we should now come very close to that 24,000 mark for the index. It's been a spectacular last 6-7 days for the index. From sub 22,000 mark towards a point where we are retesting the 24,000 levels. So after that, almost 4,200 point correction on an absolute basis for the index over the last 6-7 months. We've now almost recuperated the 50%. So 2,000 point correction is what we've managed to recover, and I think that could probably indicate that we are now at a point where the markets have come back into a neutral phase. Now there are two important patterns which we look out for. One is that the Nifty is now coming very close towards its 200 DMA. The Bank Nifty yesterday managed to break past about the 200 DMA, so that's a very strong indication of a fresh bout of support for the index. And the second important technical pattern we are looking out for is the three gaps which have been formed on the Nifty chart over the last 6 days of this price uptick. And the third gap being the most crucial support for the Nifty over the near term, which is closer to 23,400.
Okay, that's interesting. That's, of course, the market setup for this morning. Let's just bring up what the Nifty implied open as well is and what it's indicating right now on whether or not we could see a continuation of yesterday's move, mildly in the green, about 68 odd points higher. Naresh, hi, good morning. What's it looking like? Would you still bet on banks? And what about the underdog, IT, making a comeback yesterday? What do you think the sectoral composition is going to be from here onwards?
So IT overall in the near term has corrected quite a bit. A recovery is in store. And that's the call we would take on IT, say another 4-5% bounce backs in a lot of large caps and mid caps, maybe say 7-8%. And after that, it goes into a pause. But going forward, IT has lost leadership because that was the index which was holding on to the 200-day moving average for the longest time. And finally, it broke down. And now what we are seeing is a recovery trade which happened across the markets, but banks have been the leader. Like Kunal mentioned, banks are above the 200-day moving average. So one of the only indices which have gone back above the 200-day moving average. So IT for the next few sessions would be a bounce. Banks continue to be leaders and buy on dips.
If you like this video, then like, share and subscribe to ET Now.